Welcome and thank you for joining us today. My name is April Dory, Vice President and Wealth Manager with Heart Wealth Management Group of Raymond James. Thank you very much for being with us today. As many of you know, I'm on the board of the Raymond James Canada Foundation, the advisory board of the Raymond James Canada Foundation and the Salvation Army of BC, the Victoria branch, and involved with many other charities. And today we're so pleased to have with us Janine Davies, who is the Executive Director of the Raymond James Canada Foundation. But before we go on to her, I would like to introduce my business partner, Pam Kuttner.
Hi, I just wanted to add my voice in praise of the work that Janine does, and I have had an opportunity to work with her with client conversations, and she just is a wealth of information on strategic charitable giving, and I'm delighted for us to be able to do this webinar. I wish we could do these in person like we've done in the past, but for now we'll go with this, and I'm delighted to have you present this information because it's very timely and helpful for clients as well. So welcome.
Well, great. Thanks so much, Pam. Thanks, April, for having me this morning or this afternoon or wherever you are this evening. It's a really great time to have this conversation right now. Starting in November and December, 47% of all giving in Canada happens in the last 2 months of the year. So very timely, April. Thanks for inviting me to chat. So we'll just get started with the presentation, and I'm just going to share my screen. So strategic charitable giving. This morning, what we'll speak a little bit about is it's important to know where we're starting from. So we're going to talk a little bit about the charitable landscape here in Canada, as well as some strategies on giving, what to give, when to give, and who do you give to? And my favorite part of the conversation really is how not to give. So I hope we get some questions about that, April. It's always an interesting part of the conversation. So here, let's talk a little bit about Canada. So in the industry here and with respect to charitable landscape, it is the second largest charitable landscape in the world. Canadians are incredibly philanthropic. We have over 85,000 qualified donees here in Canada, which means that there are 85,000 individual operating charities that you can give to. In addition, we have another 75,000 nonprofits, and those are the ones that are doing great work, may be aligned with government, but don't actually give tax receipts, and that's one of the big differentiators. The Canadian marketplace itself for charitable giving is 106 billion, or 8.1% of GDP. And I don't know about you, April, but the last time I looked, the auto industry was about 5%. So charitable giving in Canada is deep, steep, and really, really big. There, as I said earlier, there's 170,000 charities and nonprofits combined here in Canada. As well, there's just shy of 2 million people employed. So that's a big percentage of the population. And why do we even talk about that? Because you know what, people that work in charitable giving, you know, they need to get paychecks. So they need to fundraise, and their business models are all a little bit different. So, and 54% of those charities are actually run by volunteers. So I'm not sure about you. I don't consider my day job a volunteer job. Most of us want to get paid for the work that we do and add value. So it's really important to understand that consideration. So the trends here in Canada, about 16 billion, this is from the last census data back in 2016. Canadians give about 16 billion a year. Now this is the most staggering part of the presentation, and I just want you to reflect, but 60% of fundraising in Canada goes to the top 1% of charities. I'm going to pause. 60% of revenues go to the top 1%. Now revenues, I mean by that, means government funding as well as charitable giving, direct gifts from people like you. Of that 1%, 10 charities take 9% of all giving here in Canada. Now that might seem staggering, and I think it is. So I really think it's an important conversation to have. Private foundations are on the rise here in Canada. A lot of individuals like yourselves are taking the opportunity to make a difference locally, and they're actually starting their own private foundations. We're going to talk a little bit about that today. And here's the bell ringer for me in my particular role here at Raymond James. I talk about CGFs, also known as DAFs, or donor advised funds. These charitable giving funds or donor advised funds really are disrupting the marketplace. They've been around for a long time, and we're going to talk about that later. but they are a way to have a private foundation without actually having to go through all the work. But just, I want to step back a little bit and talk about those top 10 charities here in Canada. Now, if we were meeting in person, I would have prizes to give to all of you. The number 10 on the list, and I think it's really important, if it's a cause that's important to you, is to recognize that. But the first on the list is Heart and Stroke. Heart and Stroke fundraises and does really great work, as most of you know, and they raise about 87 million a year. So these statistics are based on 2018 numbers. Number 9, no surprise, is the United Way of Greater Toronto. They do about 87 million as well a year, 87.3. The Canadian Cancer Society, these are, as I said, 2018 numbers. They were at 93 million. The Salvation Army, and April, I think you're on the board of one of these agencies. Salvation Army, another really, really big fundraiser at 96.4 million a year. Plan International, this is a great organization. They do great work internationally. They're boots on the ground. They have a lot of children's programs that you may know of and may see. Now, I want to know if anybody pays attention here and sees a little bit of a trend. The next one is Canada Helps. Now, this is a new entrant in this top list. Canada Helps is what we would call a flow-through organization. So all the organizations that are mentioned on this list can have their own Canada Helps account, and you can donate to Canada Helps, and then Canada Helps will give that money to Salvation Army or Canadian Cancer or any other charity in Canada. It's an online donation portal. It is not dissimilar from what we do here at Raymond James for our clients, but this is one where you have some of those smaller charities or maybe community foundations that don't have the capacity or the understanding or the bandwidth to really run their own online giving program. Canada Helps is a service offering, and that goes to all Canadian registered charities, but note there are fees attached to that. Credit card fees can be quite high, as well as the processing fees. The next one is new to the list this year, is the Jewish Community Foundation of Montreal. They do fabulous work. They raise about 129 million a year. Now, I normally would say the third one is a very large organization of a faith-based community, and I'd probably be asking you all questions and getting you to raise your hands at this point. But number 3 on this list has been a huge shift, is 167 million, is Jesus Christ Latter-day Saints. So they have newly become a member of this top 10 list. Now, the next one is probably an organization that represents Canada internationally. There's somebody that you give to when there's a disaster, and Pam, I'm going to ask you, do you know who that is?
I'm thinking Red Cross.
You got it. And this is an interesting organization because they were made from an act of parliament. So the Canadian Red Cross is the only legal entity here in Canada that has the governing rights to act on behalf of the government of Canada internationally. So they can go into any country and support and represent our Canadian government. They raise about $224 million a year. Now yeah, I know it's a lot of money. It's a lot of money. And the last one, now this is a great large organization that does boots on the ground. They'll sell you a goat, a chicken, and a fish. They will potentially give you an opportunity to do books for kids in schools. I have to say, biggest agency, biggest budget in fundraising. It's a big machine. I will declare I have a bias for the smaller charities. So no disrespect to anybody on this list, but I have experience and preference working with the smaller charities. This organization, I'm not sure if you know this one, April, you might go head to head with them with your role at Salvation Army. Do you know who this is?
No, actually, I'm interested in this.
Pam?
I think it's World, is it World Vision?
You got it. I think you've been to my presentation before. Yeah. So this is a very corporately run organization, and not to say that they don't do good work. They certainly do. They have the economies of scale, but they have professional staff, professional fundraisers, professional and executive management. So this is your top 10 in Canada that are the top 10 fundraisers that raise the most from the Canadian population. Important to know, and I encourage you to consider who you're giving to. So that is a charitable backstop. We're going to talk a little bit about charitable giving now. There's 3 ways to really do it, And I encourage people to think about this, whether they have a tax-related issue or perhaps just a power and passion to give. So you have the give now option, which is during your lifetime. And CRA gives us some benefits for doing that. I'm not advising on tax, but I can share with you some strategies. Your day-to-day annual income can actually be reduced up to 75% with the tax receipt given to you by making a charitable gift. Now, there's lots of complexities around this, and I encourage you to speak to your accountant. The donation year plus 5 years is what you can do. So if you have an extraneous year, this might be a really big year in income. This might be something that you'd want to do and give a gift to reduce the taxes. Because I like to say there's 3 beneficiaries in anybody's financial situation. There's their family, the ones that are close to them. There's the government, because they're going to get their piece. And then there's a third option, which is really an extension of you, which is the charitable giving. So just to keep that in mind. Now pick 2. On the give later, this is a polite way to say a testamentary or estate gift. And CRA says that you can reduce up to 100% of your income on death by making a charitable gift. Well, Janine, how do I do that? Because, my estate is the beneficiary of all of my giving. Well, it means you have to change some things, and we'll talk about that a little bit later. There is a new rule as of 2016 that is the GRE, also known as the graduated rate estate. And this provides for the option of actually laying off those income provisions over a 3-year period. It's very complex. It needs to be elected in the first tax filing after your death. Your accountant or whoever is filing your taxes on your end return need to elect that at that time. And there's a 3-year period, but I would really recommend you dealing with an accountant if you think this is something that your particular estate might need. Now, here's the area that we spend a lot of time with is the blend. So this is when a client or a donor has a tax issue. They have a desire, a need to give today because they want to have a connection greater than themselves. They want to have something, they want to give some money directly to a charity, a university, a school, or something like that. So they give a gift today. In my world, they would set up a charitable giving fund, and then we would support them on those gifts, on the giving out of those gifts. And then at the end, they also make an election, whether it's through their registered plans, the RIF, the RSP, or through their direct gift or specific gift through their will. And this is what we tend to see happening when we work with our wealthy clients. And I know that this is something that we have experienced with Pam and some of her clients. So just going to move forward. And I thought it was really valuable. And oftentimes clients don't know or understand, what's at play, who's actually contributing to the conversation, because there's a lot of things that are going on behind the scenes. And I have to say that I started in charitable giving as a volunteer. And I really joined a board just because, they didn't have a banker on the board at the time or anybody in finance. And lo and behold, did I realize that there's so much technical expertise required in the charitable giving side. So it was a natural fit for me. So when working with your Raymond James advisor, I really want you, the client, to understand that here you are, and I've got you in a little bubble right now, and you work with your Raymond James advisor, and this would be Pam and April in this particular case. And how does the foundation come in? So we're on the other side. Our job and our role is to support the advisor and the client through the path for their charitable giving. We support administration. We do the investment management for charitable gift component, and we process all the donations into the account and grants out of the account. So that's the basic part and what you would normally see on the outside of the world. But what you don't see is April and the team bringing together all the conversations about what your dreams are, what the legacy is, what's the tax, what's the private foundation options, is this a sale of a business? And the other side, and what Pam would work with you on, was what are their needs for insurance? Maybe you have a desire to give $100,000 when you die, but perhaps you should be considering an insurance policy because maybe you'll magnify the gift and leave $1 million and have that building built for that fish hatchery up on the island or out in Nova Scotia. Who knows? Pam and the team also bring together the tax specialists. We have a great team that we work with, estate, legal, and trust. So when you look at it, it's really a huge wheel of a lot of experts weighing in at their different inflection points, only when it's necessary for you. So in the next part, and I don't want to, do you want me to take a break and a pause? Do you guys have any questions?
No, this is great, Janine. Thank you.
I
Okay.
just would add that from a client's perspective in that previous slide, it's very simple because they really just have to focus on, what does their gift look like? Whether that's addition, and once you set up the foundation, you can add to it, but then they just need to choose their beneficiary. So all the logistical stuff is removed. So it's very simple and they don't feel like they're locked to a charity forever as well, which is another good thing that they like to know as well. So it's worked very, very well. Thanks, Janine.
No worries. It's all about flexibility. So let's talk a little bit about tax, because tax is really important. And as I said, I'm not an accountant, but I can certainly talk about some of the benefits. So there are tax credits and incentives put forward by CRA. Now I'm going to mention we're in COVID times. It's COVID-19. It's during that context. From all of my connections in the charitable world and the political world, I would suggest that all these government benefits have to be paid for. There are rumors on the street from a financial perspective that the capital gains inclusion rates will be changing. Right now, you can eliminate capital gains by making a charitable gift, which is fantastic for some. If you realize that gift in your portfolio and then you give, it doesn't have the same benefit. So I just consider if you have properties or real estate or investments that have huge accrued gains, charitable giving might be a way to offset some of that. In the year of a particular gift, the donation you can claim up to 75% of your income. You can reduce it with that tax receipt. That tax receipt can be carried forward for the donation year plus 5 years. In the year of death and the year preceding death, 100% of your net income can be reduced with making a charitable gift. So this is where, when you go back to that slide with all those pieces that are coming in the puzzle, that I'm hoping you're working with April and Pam on the concept of how to reduce tax payable. Unless you want to give it to the government. Remember, I said there's 3 beneficiaries: your family, the charity, and the government. Choose 2. So if you just want to give to charity and you just want to give to the government, go ahead. But you might want to retain some gift. It's very rare that I hear that.
Very rare.
I had one client in 5 years here at Raymond James that said, and he had huge capital gains. He's like, I'm not giving anything to charity. I was like, whoa. And he had a sizable estate. I was like, okay, that's your choice.
I've heard it too, but it is pretty funny. I mean, but the one I heard, they wanted to help pay for the roads and things because out by their house they had potholes or something. like as if the government was actually going to do exactly what they wanted.
but here's the deal, April. If they'd really thought about it, every municipality in Canada is a qualified donee. They could have given the municipality a direct gift of $100,000 or $1 million, and they could have got that paved right in front. They could have done it. They could have cut it around. Instead, it's gone through federal, provincial, before it ever gets down to municipal. I'm quite active in my municipality, so I know they love to get gifts, but usually they don't get them because people don't want to leave to them. But they could have done it the other way, and it probably would have been better.
Yeah.
And this is an area that we spend a lot of time working with, is the securities in kind. So what that means is, let's take an example. We had a client a few years ago that bought the cannabis stock, and they had huge capital gains. They donated, in that particular case, they donated $1 million worth of this cannabis stock. I think they were in the beginning group, so maybe they paid 50 cents a share. They had $1 million worth of it. So almost all of it was a capital gain, and they knew that was going to impact them greatly because they had all this other stock they were going to be selling. So they made $1 million donation. They got the tax receipt for that donation, and they absolutely eliminated all the capital gains. Now, he knew at that particular time he would be getting more stock, so that was fine. He was averaging up his price, which meant he was reducing his tax exposure. But securities in kind, absolutely most favorable form of tax treatment for any charitable gift. If you know that you're going to do it, then you should be giving your securities, always your securities first. And unfortunately, and this is a scary part, I've talked to a few estate and trust lawyers of late, and I've seen securities accounts where the banks completely sold out the investment portfolio and donated the cash.
I know, it's crazy.
They want to shutter. So you need to pay a little bit of attention on how these structures are set up. Yeah, and just to be aware, you have gains from other distributions. In my family's case, my stepdad had antique cars, and they're worth a lot of money, and there are tax implications for it. They need to be included. So you need to consider the other types of gifts. I work with an insurance agent who's also a wine aficionado, and part of his role is to appraise wine cellars. And did you know that you actually can't sell your wine out of province without going through the province of BC if you have a wine cellar or any province? Alcohol can't transition interprovincially without a deemed disposition and sale. So if you have that incredible wine cellar and you want to donate it or you want to sell it on death as an asset, there's tax implications for doing that.
Wow.
Yeah, there's always more in the onion. You just got to peel it. So let's talk a little bit about what and when to give. So in this particular slide, I'm sorry, everybody, it's probably not very big or clear, but I would say that our website, rjcfoundation.ca, and we can share that with you later, there is a calculator on there that you can play with. And I encourage you to go on there and have some fun. In this particular case, I've done a BC resident and their income over $113,000 in a calendar year. They want to donate stocks, and their asset is worth $500,000 today. And they paid $100,000 for it, so maybe they had some of that cannabis stock, and they said, okay, what if I make a donation just of $250,000? In this particular case, you'll see the green boxes, asset donation of $250,000. That goes into a charity or into a fund, their charitable giving fund. It generates a tax credit on the other side of $115,000, which you'll see here gives you a tax implication of a negative $65,000. So in this particular case, we've completely eliminated any capital gain, and that tax credit, the after-tax donation credit, you can actually carry forward as well. And the actual cost of the donation, and this is the interesting part. So if you take it from an after-tax basis, you may have donated $250,000, but if you were just going to sell that security and put it in your pocket, what this yellow box tells you is the actual cost of that donation was only $134,971. So I know you have to pause on that, and I encourage you to pause the screen and look at the numbers and pull up your own at rjcfoundation.ca. You'll click on the box that will say calculator. Play with your own situation because it's really important to understand. On the next slide, this is an interesting concept, is a testamentary gift, or how to eliminate taxes on death. In this case, again, I've used BC because that's where I live, and the current value of my total estate, because maybe I had a fantastic home and it's worth $1 million, plus I've got no, maybe my house isn't worth much, but I've got a recreational property and I've got some investments. The original cost of my investments in my property are $200,000 because I bought them in 1981, because that was an average home price back then. And I want to eliminate tax on my estate. My goal is to make sure my beneficiaries get some money, but also I don't want to give that number to the government. I'm going to give to my kids, and I'm going to give to charity. That's what I've decided. So in this particular case, the scenario is that by making a gift of $593,234, and preferably we're giving securities, eliminating taxes and such there, we generate a tax credit of $289,000, and it literally reduces our tax to zero. I don't know about you, but that sounds like a great deal to me. But the kicker in all of this is on the orange box on the far right hand side. I think oftentimes clients think it's a zero-sum game. I give to charity, my kids get nothing. I give to my kids, the charity gets nothing. In this particular case, you've given to charity and your kids are still getting it, just shy of $1 million at $906,000. You can do both. Who doesn't get the money? The government. I'm just going to pause there, because I can see that's where the money is. That's where the pa happens in the brain. It's like, I can give to charity and my kids get money. Because usually if I talk to most of my parents' generation, they're going, oh no, my kids are getting it, but I can't give to charity because I don't have enough. Well, there's so many advantages to giving to charity. The government actually is saying, give to charity, help us support our social network and our social systems, and we'll take a lesser amount. It's pretty good for them.
Yeah.
And the next consideration for a donor is, when do I even consider these things? A last minute donation, I get calls on December 28th every year because people realize, uh-oh, I've got a huge capital gain. I sold Bobby and Susie my cabin that I had up on the lake, and now I've got this disposition I've got to account for. I am retiring. Now I'm going to sell my business and I'm going to give it to the next generation. And I have a huge capital gain because I've done a great job and I've built it over the last 50 years. Occasionally, there are executives in the group that have stock options and they're sitting there with underlying gains that they don't know what to do. And they want to eliminate some of those tax issues. This is the most often in conversation that we have as we start with estate planning, is I realize I can actually give to a charitable gift and, as I said earlier, give back to my kids. And if I don't have kids, I can consider just giving all of my money to charity and the government gets that big fat zero again. Transitioning out of a private foundation. So we've had situations where we've had many clients that maybe have come from second, third, or even fourth generation where they've had a family foundation. And these family foundations maybe started at 5, 10, or 20 million in the 50s or 60s or 70s, but now we've dwindled down to about 1 or 2 or 3 million. Well, the cost of running a foundation on an annual basis can be burdensome. So in this particular case, there's only one form that you have to file with CRA, and you could transfer all the assets that you have in your private foundation into a charitable giving fund. And then the charitable giving fund, we would work with you and support you, and we do all the tax filings, and you just get to focus on the giving. Sound good?
Yeah, that's amazing.
Fabulous.
Yeah, I think a lot of people think, oh, well, I'm a retired lawyer, retired client. I have the capacity, skills, and knowledge. I'm going to do it cheaper and more cheerful on my own. But what they don't seem to remember is when you're retired, now COVID might be different, but when you're retired, your friends are also retiring too. They don't want to do your financial statements. They don't want to do your filings with CRA. They don't want to do your board or audit meetings. What they really want to focus on is the giving. Okay, that's the most fun. That's the meat in the sandwich. So how do I make my giving strategic? Well, I think that most of you would see this coming. We have preparation. I'm all about alliteration here because it's preparation, planning, and process. Working with your advisor at Raymond James, we bring all those other specialists into bear. If you have external specialists, I often deal with accountants and lawyers that are outside the bounds of Raymond James, and that's where all those centers of influence come and play. You can probably understand from our conversations that this service offering isn't for the average investor. It's not. In our particular world, the minimum clients that we have are 100,000 in charitable giving. That's what we start with. Just because there is so much technical knowledge that's required, that's the floor that we start with. So, pause, breath. Any other questions, you guys, so far? Okay. So what I'm gonna. Sorry, Pam. Go ahead.
No, it's all good. Just to lay out. So I was going to add Pam in there to your alliteration there. So anyway, we're good.
I love that, Pam. That's great.
Yeah.
So ways to give. So we're going to talk a little bit about donor advised funds, and I'm going to explain them. But I think sometimes I'm going to put myself on mute, and April and Pam, if you can do that too. I think sometimes watching a video makes things a little bit more clear, and I'm very visual, so I'll do my best to get this going. See if we go here. Okay, that was my infomercial.
And it was silent, which was interesting.
Oh, you couldn't hear it.
We couldn't hear anything.
Okay, well, we'll attach it as a link on the follow-up.
Okay, perfect.
Okay, sorry about that.
That's
The
okay.
first time it hasn't worked. So from the video, and then I'll explain it. So you are the donor and you make a donation to Raymond James Canada Foundation. So inside the foundation, we open a charitable giving fund in the name that you choose. So I can honestly tell you, I have the Smoochies Foundation, I have the Adams Family Foundation, I have Psalm 115-1 Foundation. This is where we take final liberty approving the name. I recently had somebody wanting to call their foundation the RJ Foundation, but we said no because we're RJ. That's the only time I've ever said no, and we wouldn't ever use inappropriate language. So we create something in that soft blue line inside, and that's funded with your 100,000 donation. And for that, you receive that tax receipt that we talked about. So if it's in your current year, then you can reduce your income by up to 75%. If it's on death, then it can impact your estate plan. And then our job is to work with you on the other side, which is the fun side, which is giving all that money to charity. Does that sound like something fun? Would you like to do?
Amazing.
Okay. So why do we do it and why is it important? For the benefits for our donors is it's extremely cost effective. We charge a 1% administration fee. If that size of that fund is over $1 million, and of course we do reduce it. It's entirely customizable, so you can choose the name that you want. It's really quite simple, and you get the opportunity to create your own family legacy or your own personal legacy or recognition or honor of somebody that's passed away. One thing that we are a little bit different, if you want to go down the path of opening your own private foundation, what you will learn very quickly is there is nothing private about a foundation. It is entirely public information. They call it a private foundation, but everything is on CRA, who your board is, where you give, how much you pay your family or your friends who are on the board to run the system. So in our model, it's entirely confidential because you're behind the big blue line, which is Raymond James. The funds are flexible. So this is where I say one of these things is not like the other. In our world, in the community foundation and charitable giving world, a lot of organizations have, community foundations have donor advised fund programs. They've been doing this a long time. I had the privilege of establishing a community foundation in my own community. But the difference is most of the governance and those mandates require that money is permanent. And so in our case, you put in $100,000, maybe you put in another 100,000 every year for the next 10 years, it goes to $1 million. You say, Janine, my family and I, we want to give that $1 million to Victoria Hospital because we want to build a new wing. We go, awesome. April, solid the account, let's get that money out there. We are achieving your family dream. Fantastic. In most of those other cases of the community foundations, they're taking your 100,000 and they're giving anywhere from 3.5% to 4.5% a year. That's all. They're holding on to the capital because how they run their operations is from the revenue that they generate from the investments that they have. So the business model is different. Our business model is such that our job is to facilitate giving for our clients. Raymond James says this, I'm paid through our corporation. I am not paid from the foundation. We have the minimal expenses. And I want to tell you that 1% administration fee, every dollar we generate in our fund, I give out in grants to our employee granting programs. So every dollar we make from that goes back into the local communities where our employees are doing great work. So it's a little bit of a different thing. And ours are strategic because, of course, you get that tax credit, you can carry for it for 5 years, but you're working with a team of specialists, and nothing works better than that. So the question that, oh, sure, Pam.
I just was going to clarify, Janine, is there a minimum sort of holding time once a family or an individual sets up the foundation account with Raymond James that they have to keep just the capital in there, or is there a minimum, or they could do that? Like, did they have to? Are they limited to an income stream for 2 or 3 years, and then they could do a lump sum, or is there flexibility right from the get-go?
Right from the get-go, Pam. Good question. We generally ask not to set them up and then do what we would call a flow through, where I give $1 million into it
Right.
and I give $1 million out. We will require that they keep a minimum of 100,000. So they've got that floor that they need to keep in it at all times. So in their first year, They want to give out 20,000, they need to donate 120,000.
Okay.
And we believe that Pam, you and April, you shouldn't be managing any investment accounts under 100,000 because
Right.
you are money managers and it's your job to do that. The difference with our offering, I would also say, is that that money goes in at 100,000, and a lot of our clients give it on an ongoing basis, and then the advisor nurtures those assets and they grow. So all the growth stays within that fund, and that growth is yours to give away at your discretion. Our board takes governance and very seriously, but you make the recommendations, and so long as that charity is a qualified donee according to CRA, we give that money out. Unlike our parent company, we can send money across the border down to the States, albeit goes in Canadian dollars. But there are many qualified donees in the States, and it's usually related to universities and where Canadian students go. So that's a little bit of that.
Thank you.
No problem. So where do you start? And these are the ones if I was talking to my mom, she would say, "Oh, you're contemplating your navel again, Janine." So where do you start? And I'm going to ask you a big, hairy, audacious question. You had a magic wand. What world problem would you solve? Any thoughts? You too? Because here it is.
There's so many problems, it's impossible.
I don't have a wand, but I have a pencil. I have a pen. I don't know if you can see the pencil. Okay, so what I'm saying is you actually have a magic wand. All you have to do is put your mind to it. And I've heard many stories and worked with many donors that identify a problem based on their professional experience or their family experience or their life experience, and then they set a goal in mind. You can do this, and you can focus on solving that world problem and let us do the administration. The job is not to give you the boring part of the work. I would also ask you to consider, what's your family story and how would you like your legacy to be shared? Do you want a legacy? Most clients say, "Oh, I want that money to last forever." But forever today is a really long time, and talking to my charitable experts, forever is probably between 30 and 35 years. So if you establish a charitable giving fund less than, let's say, the $30 million mark, we know it's not going to last forever. So if you are comfortable with the 10 to 15 to 20-year time frame, 15 years is a generation, and we talk about what a legacy is. So if you want that money to last a generation after you're gone, so your kids, your grandkids, your friends, your family, people that are still alive remember you, I think it's a great way to consider it. So I would ask you to ask yourself, what does success look like? What do I want to accomplish? Because I think a lot of people are very reactive in their charitable giving. The charity called me, and so I got to give them some money because they're in crisis. So step back from it. Go back to your original question. What is the problem that you're trying to solve? What have you identified from your own life experience? And consider, how can I solve that problem, or can I contribute to something that's already going? You may want to set up a charitable giving fund because it's tax efficient. You already work with April and Pam. All the donations can go in with securities, super easy. And then you may want to support another initiative that's really strong, well established. We can do that for you, and we can work with you on that. I'd ask you to also say, what are your goals, and are they aligned with your financial capacity? There's a lot of people out there that want to solve some really great world problems, and some of those problems are going to take a lot of work, a lot of money, and people forget to ask, who's available to work with me on this journey? Do I have my friends on my side? Do they know I'm passionate about the environment? Do they know that I want, for example, I have a friend who's leaving all of her wealth, and she's got considerable wealth. She's living at Alta the Nature Conservancy. She believes in protecting the land, and I think that's fantastic. But it's about what's important to you. She knows that she doesn't need to go start another charity. She just knows that she's going to all her assets will be gone, and that's where they're going. Where do I currently give? And do those charities celebrate how I live, what my personal struggles were, and where my joy comes from? I talk to a lot of donors, and there's a lot of gifts that happen because somebody's passed away. You'll see some of the other agencies, healthcare gets a higher preponderance of any of the government and direct gifts, whether it's cancer or some of the others. Canadian Cancer has gone through a lot of consolidations of late, the organization itself. Prostate Cancer Canada and Breast Cancer Canada are also under Canadian Cancer Society now, so they've all merged and consolidated, so it's a big, big machine. I always ask clients, what what did you celebrate? I'm a mom. I have a son who's in Scouts, and I know how important and valuable that is. I have other friends in my other role where I was a volunteer on the YMCA board. You know, consider where you got your joy from. Consider what you are inspired with or by or from.
Well, I love that question, Janine. Like, we have clients that are giving to various search and rescue societies because they love ATVing out in the mountains, and you know, they've maybe experienced a situation where it rolled and they had to get saved. We have other people who are giving to things like that because, you know, they love backcountry skiing. And so, you know, for active people, as we're thinking about that, it's not always just the traditional ones. Some of those alternative charities do a lot of great work, and they do it on a shoestring budget, and just like actually a fairly small donation, or you know, I have a girlfriend, and her big charity is recreation adapted, and so it's essentially she helps people who maybe are impacted by, you know, in a wheelchair or other sort of movement impairments, still go to the beach or still go do fun things. So there's some really cool stuff. And I think that's a wonderful question. And I'm glad you posed it like that.
Yeah, I just think it's really important to celebrate where your joy comes from. And, yeah, those outdoor survivors, you know, here on the North Shore in Vancouver, they're out every weekend in the Coquitlam and North Vancouver area. So I'd ask you to consider also, is your philanthropy private? Do you want recognition? A lot of people, you know, want their face on the cover of Vogue magazine or a philanthropy magazine or wherever, you know, they want the world to know. It could be a corporate gift, so you may want your employees or recognition given that way. But there are a lot of people that want it private. And so recognition is something that we can help you support you with, or we can make it entirely anonymous. And I become the screen and the wall, my team and the team here at Raymond James Canada Foundation, and we protect your privacy. I was in a meeting this last fall. This is always the time of year that it happens, and I met with a couple. They brought me the list. And so I was meeting with the advisor, and they had this list of 40 different charities, and it represented over $40,000 in annual gifts that they were giving. And I just met them. We were having a lovely chat just about what their hopes, dreams, desires were for their charitable giving. And they said, well, this is what we give to. And I looked at it. And just on a cursory review, I said, so who's interested in the arts? You know, and the wife raised her hand. She says, oh, I'm really passionate about the ballet and opera. I said, well, that's fantastic, because the arts are completely underfunded relative to the entire marketplace. So I'm like, all about the arts. I grew up in a dance studio, so I think that's fantastic. And then I looked and I said, oh, there's a lot of youth, disadvantaged youth, challenging youth ones. And I said, who's interested in that? And husband raises his hand. Okay, you know, he went to the Y when he was a kid. He needed some help. He, you know, was raised by a single mom. And these are people in their 60s and 70s. And I was like, okay, so you had a tough life in the beginning, but you know, you've been incredibly successful. And I said, then there's this melee, this like big mush in the middle of about 25 different charities, and there were donations from I tell you, from $25 to $2,500 in this big mess. And I said, you can't say no, can you? And their eyes widened. They're like, oh, how do you know? And I said, because I can tell by who you're giving to. It's just whoever calls you, you'll give them money. And I said, so I want you to take a step back, think about it. You know, are you making a difference in these charities? And it's not to say that those charities don't need money. There may be something in there, or maybe they have a friend or a family member that's more interested in that cause that they can make a meaningful connection with. My whole mantra for charitable giving and working with the clients is find something that's really meaningful to you. Find your mission, find your partner in this, because we talked about contemplating your neighbor. We talked about solving world problems. We talked about the struggle. So why not make a difference? And then we support you and help you in saying no. I'll talk about a little bit about how to do that too. And I would ask you to have a partner in your philanthropy. Is your family even aware of your intentions? I have met with clients that have never said a thing to their kids, and the kids are blown away when they find out mom and dad have decided to give money away. And does my family agree with it, or will they challenge it? Here in BC, we have the Wills Variation Act, So that can be an incredibly difficult conversation, and difficult for the kids or the beneficiaries to be put in that situation. I'm a firm believer in communicating often. And will they carry out your wishes? And if not, who's going to do it? Now, I'm just going to pivot a little bit here and ask me any questions, but this is what clients and members often forget is when gifts fail. So in this particular case, this particular client, she was very onerous and very challenging to deal with, and I asked her to make specific requests of percentages in her will. And what she came back with was specific Raymond James account numbers with specific securities. Now, April and Pam, you're both investment advisors. You deal with clients every day. How smart is it to donate a specific security, not knowing the volume of security, the balance of the security? What do you think?
And even the account numbers is a bad idea because those can change. I mean, you know, the values change significantly, and the holdings, I mean, now you're restricted from selling those things. And what if, I mean, WSP Global wasn't even around a few years ago because that came from a merger of Genevar and WSP, which was, you know, they're only since 2012. That's only a couple of years.
Yeah, exactly. So in this particular case, so this, if this happened today, this was a few years ago, this gift would fail. And so that tax and all those other things that we talked about rolling out, that would all unravel, and there'd be huge tax implications. In this particular case, they also gave specific amounts of securities to the charity themselves, which is even more horrendous because now the charities, you know, in this particular case, the advisor called me, I think it was a year after this will was written, and he said, well, I need to rebalance. What do I do, Janine? And I said, well, all these gifts are going to fail. I asked them to put percentages in. I asked them to be generic. I asked them to list the charities, and they completely didn't. So we eventually got this client to a lawyer who actually understood estate and charitable giving, because like accountants, not all lawyers understand estate law. Like some are corporate lawyers, some are tax specialists. That doesn't mean they understand charitable giving. So if you're writing a will, we can suggest some will wording, but you know, it is a conversation. And I often read wills and say, let me just read what it says. What do you think it says? And then let me read it and I'll tell you if that's what it says. I'm not a lawyer, but I can certainly read a will. So what can you do today? So moving forward, documentation in BC and here in Canada, we talk about something called the letter of wishes. This is an outside letter to the will, and it informs your family about what your charitable intention is. In Ontario, you would probably have dual wills. It's a very popular practice out there. But a letter of wishes is really that contemplate your navel conversation that you had earlier, and it's documenting my intention and goal is to, achieve world peace, and I would like to do it through supporting agencies like that deal with international aid in a particular area. For example, the Red Cross, World Vision. These are just a few of the agencies that I'd like to support if they no longer exist.
I'm just going to interrupt you. We see these a lot, and what we are seeing more commonly now is videos. People make short little videos of themselves talking to their kids and explaining why, let's say they have 3 kids, why John gets less than Betty and May, or whatever their kids' names are, and maybe why they've chosen this charity or that charity, or they may not have specifically chosen a charity. They may just say like pets, or like I said before, search and rescue or something like that. They may just choose and tell a story. And even interestingly, we've had a couple cases where the family story that made these people who they were, their kids didn't even know it.
Yeah. A lot of the reading I do is all about intergenerational wealth transfer, and one of the key contributing factors to doing that is actually taking your kids and volunteering with them or teaching them about the charitable giving, because that helps to share family values and the source of all the wealth, right? You need to know your family story. So just documentation pieces that we deal with all the time is, I can't say it, update your will. I can't say that loud enough and clearly enough. So many, especially in different provinces, there are different rules. And if you're in Quebec, there's certainly different rules around charitable giving. Consider using registered plans, your registered investment fund. In this particular case, in all provinces other than BC, or sorry, all provinces other than Quebec, you can make a named beneficiary, a charity, a named beneficiary of your RIF. You can't do that in Quebec, but you can certainly do that in the rest of Canada. It's a great way to bypass probate, get the money into the hands of the charity or into your charitable giving fund right away. But just a caveat on that, there can and always is a little bit of a tax burden. So the estate has to have enough to be able to pay that. So that's a consideration. Of course, you want to make sure you're working with an accountant and your investment advisor at the same time. Different schools of thought using specific gifts, using named gifts. I know, April, you've got some experience versus percentages. It depends how complex your will is. And again, everything is a consideration. If you give 100,000 to Bobby and 100,000 to Susie, and then you give the residual of your estate to charity X, you may end up giving like 3 million to charity X and only 100,000 to each Bob and Susie. So it's understanding you may be writing your will today, but it may not be disposed of for 20 or 30 years. So it's really hard to think through some of those challenges. And I think that the team here can help you with that.
Well, and if you are going to do things like that, I mean, I would say every 2 or 3 years you review the will, and then percentages. The other risk that people don't think about with that is obviously if you leave a percentage to a large charity, they're going to require a formal accounting of your will. And if your situation was very simplistic, other than that, it's going to add a burden to your executor of costs, because they're going to have to hire a professional accountant to report to the charity, who's now entitled to know all the details, and they will sue if they have to get that information. So it is really important to get a proper your will reviewed regularly, and to use a very good lawyer on that if you're thinking of that.
Yeah, and so that's why we look at the generic will in terms of what your gifts are, and we really rely on that letter of wishes to inform us of the intention and the how. That's how the money goes away and what the hopes, dreams, and wishes are for the testator. That's the most important part in our conversation. At Raymond James, we have settled so many wills, and we receive the money in. We're glad to receive it, and then our job is to fulfill the wishes of the client in concert with the next generation, or with the friends and family that are named as the successor advisors, or just based on the client intention. They may not have anybody, so we're able to do that with them. In BC specifically, engaging under understanding what the Wills and Variation Act is. That's a really big one out here, because you can challenge wills. And engaging your financial advisor. You can't do this without a financial nowadays, especially if you're talking about the magnitude of some of the clients that we're working with. This is what happens all the time. People don't write it down. And April, as you said, you need to review it annually. So in my world, I like behavior. I like action movements. I think everybody should make charity a part of their daily life, and especially in the time of COVID, whether that's, and I'm not talking about traditional charity, I'm talking about helping out your infirm neighbor, picking up groceries, getting your kids to take the garbage out. Those are little small acts that build up to a concept and a belief and understanding that there's more to the world than just your little island. Because I'm isolated. We're all really isolated right now. I believe it's important to do your research. I'm happy to share some resources that I look at. And I just want to say the caveat on research is I really don't enjoy when I hear clients saying, well, this charity spent X amount of dollars on their operating costs. Remember I talked to you about like the big charities and it's a machine? Yeah. Well, some of those little charities are on such bare bones. They need to be able to pay salaries to get people in the jobs. And here's a good example. So I have a charity I work with. It's a kids charity. It's an AIDS charity. They do kids camps for kids that have AIDS, or they do respite for the parents that have HIV and AIDS, and the kids can come to camp. In that camp, the government here in BC requires that they hire doctors and nurses. And doctors and nurses, because of their union agreement, will do it on an honorarium basis of $1,000 for a full week of medical or nursing care. So that doctors and nurses donate their time, but they still have to charge $1,000. And I think in that particular camp, there's maybe 30 doctors and nurses that come through. So operating costs are really, really high. Now, how can you manage or evaluate the benefit of that lifetime event for one kid to go to camp and maybe have a change their world, to the respite that the parents get, whether they're sick themselves or their kid is HIV positive or what have you? How do you equate the value of an organization or an event that costs a lot to run but provides such heartfelt connection for those people? So I just caution people when they look at the cost of programming and the cost of running a charity, you cannot apply the same traditional business model evaluation of earnings per share, all that stuff. You cannot apply that in the charitable case. And you're not in town, because I think it's really important to consider that. And I often get clients that say, oh, I'm going to go tell the charity I'm giving them a gift in my will. Don't do that. That's the big ego talking. What I want you to do is go down there and volunteer or call in and see how you can help. Get to know them, get to understand what the problems are. You might find you don't like them. I've had that happen. Or you might find that, oh, I was going to give them $10,000 in a gift. I want to give them more. I want to fundraise more. I want to get my friends involved because they're doing such great work. You need to understand what is it that charity needs. And please don't ask them to do stuff that they're not really there to do. Volunteer, learn, and also narrow your focus and consider the impact. And the most important aspect of all of this is to make it personal, because it is. It's all about you, really. So contemplate your navel. What will your legacy be? Be intentional, give, and then you too can be running on the beach someday when we're allowed out in the human world.
Thank you very much, Janine. That was amazing. I think you covered enough topics to give everyone a taste of what's possible. And we're available. You can visit heartwealth.ca, which is our website. So that's heartwealth.ca, to reach out to us. And of course, the Raymond James Canada Foundation, if you just Google that, Janine's beautiful face will pop up. And she is really a resource behind the scenes that we would reach out to on your behalf. But there is, like she mentioned, the charitable giving calculator, and you can play around with your own personal financial information on there and see what may make sense. So thank you very much, Janine.
No problem.